Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that.
Euro dollar. A bearish closing long black Moreira on Friday and fourth bearish black crow pattern. Prices dropped down through the congestion between 114.82 to 114.95, formed from the January and February 22 highs, followed by the June 2020 high at 114.22, halting and closing right on the purple neckline extension, currently 114.13, of the August-September 2020 head and shoulders top. This is a continuation after the dip and short pullback upwards from the break below the dark blue late January to very early March descending wedge pattern. The primary target for this has been reached, and we are now making significant moves down towards the much harder to reach secondary target X1 down in the 113.56 zone. Looking further below, well, apart from the late July and early August 2025 lows at 113.99 to 113.89 and the lesser Fibonacci line at 113.38, we have little on the way until the July 23 high at 112.76. So far today, well, a seeming build-up of a basing action at the purple neckline extension, initially somewhat half-hearted, but now moving up to test the congestion between 114.82 to 114.95. Cable, aka sterling against the US dollar. A bearish closing black Moreira and fourth bearish black crow on Friday. The market has developed from a late January to mid-March descending wedge pattern into a bright red early February to date bear channel, currently 131.86 to 134.29. However, in the process, prices have punched down closed below last Friday, the previously mentioned congestion, currently between 132.98 to 133.20, made up from the purple neckline extension of the small April to May 25 head and shoulders continuation pattern, which is 133.20, along with the nearby bright green neckline, currently at 132.96, for the August to October 2025 head and shoulders top, and the March 22 high, also at 132.98. Well, not very far away from it. And that's for January this year. So altogether, they seemed a significant new dynamic band. In addition to this, prices dropped down below the combined August high and the 61.8% Fibonacci line of the June 16 to September 22 move. All of that is at 132.65, plus a lesser fib at 132.46, as well as the more formidable bright pink neckline for the August to October 25 head and shoulders top, currently at 132.30, with prices closing just below this bright pink neckline and just above the bright red lower bear channel line. Well, below this, we're in a fairly free area down to the congestion between 131.33 to 131.44. Overall, in the bigger picture, prices maintain their stance within the previously broken and now repaired very shallow dark blue bear channel, dating between early July and early August last year to date, and that's currently at 129.63 to 135.90. And so far today, a reactionary higher open and test down to last Friday's close and low before moving back up to right now just short of that green neckline extension. US dollar against the Japanese yen. Bullish closing white Moreira and fourth bullish white soldier on Friday, the highest high and high close since July 2024. As I previously warned a number of times, the move upwards would trigger a mid-January to mid-March double bottom pattern, which it has done. Thus, we now have a primary target X up in the 161.49 area, with a harder to reach secondary target X1 up in the 163.19 area. To reach these targets, prices have created a mid-February to date dark blue bull channel. It's currently 158.5 to 161.23. And the market has moved up and closed over the first obstacle in the way, the May 1990 high at 159.61. The bigger picture, prices are now also within the September and November 25 to date bright green bull channel, currently 153.65 to 161.11. This bull channel has taken over the running from an earlier shallower bull channel. Overhead, we now have congestion at 160.05 and the April 1990 high at 160.34. Additionally, I've drawn a new mid-September 25 to late January 26 bullish shift pitchfork. So far it's unhighlighted, and on this the market is just underneath the middle time, which is currently at 160.15. So far today, a lower open just below the May 1990 high, but a brief attempt higher right up to last Friday's high before heading back down, though still within just about last Friday's range. US dollar against the CNH, the offshore Chinese yuan. A second bullish white soldier on Friday after the previous session's small yet important bullish engulfing pattern. The market moved up back into the previously broken shallower January based bear channel, currently 688.46 to 692.08, closing back up over the May 23 low at 689.53. Beyond the broken upper bear channel line, we have the bright green short medium moving average coming down, currently at 692.62, which is capping the market like a makeshift downtrend these past 2 weeks, followed by the interesting bright red trend line extension, currently at 693.54 of the May to August 2022 ascending triangle. Looking below, we have the significant 50% Fibonacci line, the February 22 to April 25 move at 686.60. I'm beginning to think about drawing either a January to early March bearish pitchfork or a smaller late February to mid-March bullish pitchfork. Now, so far today, test up to Friday's high, but since pulling back down to just below the May 23 low. US dollar against the Brazilian real. A bullish closing long white Maribosa and second bullish white soldier after the previous session's bullish opening long white Maribosa. Now, prices initially dipped back below the 61.8% Fibonacci line, the April 22 to December 24 move at 524.07, but then rallied back up through the combination of the 38.2% Fibonacci line of the October 2018 to December 24 move at 527 even, and the declining green short medium moving average, currently at 527.12, pushing up through a lesser Fibonacci line at 532.15 and capped by the declining mauve medium moving average, currently 532.87, to close right on that lesser Fibonacci line at 532.15. Now, the question all this action has left us is whether the last 3 weeks, whether they have left us with either a double bottom and or a double triple top. Now, beyond the mauve medium moving average, you have the July and August 24 lows at 636.76 and 637.59 respectively. The slowly declining gold long moving average currently at 538.74, just above that. In the bigger picture, we're now in between the dark blue middle time below, currently at 517.58, and the dark blue upper time above, currently at 543.49 of the important dark blue mid-December 24 to mid-April 25 bearish shift pitchfork. This long-running dark blue bearish shift pitchfork is still the excellent, very excellent showrunner here for this market. Today we've moved straight back down, back below the fib and down below the green short medium moving average so far. Looking possibly like a potential pipe top, but we'll see. US dollar against the Mexican peso. A third bullish white soldier on Friday and the highest close since early January, though not the highest high. Prices opened at the slow declining mauve medium moving average, currently 1784.10, dipping back just below the dark blue doubled up bear channel line, currently 1823.25 of the original November 25 to February 26 bear channel, before turning back up and closing just underneath the middle time, currently at 1803.78. That's of the newly drawn late January to late February bullish Andrews pitchfork. I'm beginning to wonder if this new pitchfork might be showing the new bullish angle of attack here. Looking below, We have support at the small congestion between 1756.95 to 1759.58, containing the combined August 2017 and July 2024 lows at 1759.58. We're further below the pierced green descending short medium moving average, currently at 1750.37, a little underneath the July 2017 high at 1743.74. Now we have a small but significant pattern to consider here. It's the whole mid-January end of February action as a double bottom, Adam and Eve type, with a primary target already reached at 70, 90, 80, and a secondary harder to reach target, X1 not too far above at 1805.95, in that area, that zone. Now so far today, well, a reaction lower open and subsequent move down below the mauve medium moving average towards that and testing the breach dark blue doubled up upper bear channel line at the moment.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.